From the hallowed halls of Epic Financial Strategies and the Epic Production Studios here in Red Bank, New Jersey, we are Infinity X, giving a stage and microphone to human excellence in the constant and never-ending pursuit of creating infinite sales opportunities by having conversations and giving you access to human excellence, the entrepreneur, the business owner, and the person that you want to be doing work with. And guys, tonight is absolutely no different. We are thrilled to be here this evening. We're joined by Frank Monetti. Frank, how are you this evening,
Thanks
brother?
for having me, man.
Oh,
awesome.
Thank you. Pleasure's absolutely mine. Folks, we are infinityx.com. We are InfinityX YouTube for the replay, also Spotify and Apple iTunes. And tonight, you guys are going to get a absolute deep dive, high-level education and commentary on the interest rate market, on the housing market, on what's happening with policy, and damn near just about everything that you want to know monetarily when it comes to money. Because, Frank, would you be kind enough to credentialize yourself with the good folks that are out there about who you are and what you're up to in the
Absolutely. So my name is Frank Monetti. I'm with Advisors Mortgage Group Freehold. That's my branch. Been in the mortgage industry. It's actually started in '93, so just started year number 30. So, which I can't believe I'm saying. We all had a plan to be 41 and done. That didn't quite happen. But yeah, so I've been doing this a long time. Still plugging away. Happy to be here and talk about everything that's going on in this market. That's, I thought I woke up 2 years ago and thought I saw everything.
Yeah, isn't that the truth?
And I realized I didn't see everything.
Yeah.
With what we went through pandemic and what we went through now most recently with, housing demand and interest rates. And, and the unfortunate thing is the general public is misinformed about a lot of stuff, and that's what we want to kind of clear up and talk about, I'm sure. So, yeah, so that's really my story. Started out with a broker operation for 11 years until the collapse came along in 2008.
Yeah, and I want to go deeper into that, Frank.
Sure.
But what I always want is because I think the true entrepreneur, right, the business owner, they're rooted in their roots, right? And I always think that, the entrepreneurial spirit comes from the stories of the past,
For
right?
sure.
It comes from experiences from the past. So share with the good folks, if you wouldn't mind, a
happy.
little bit about what it was like for you growing up.
Yeah, happy.
And,
Happy to.
where you went to college,
Sure.
what's your aspirations?
Yeah, absolutely. So I grew up here in Hazlitt. My family's a Hudson County family.
Okay.
Mom was from Jersey City. Dad was Union City. Dad specifically came from a family of small business owners. I mean, literally, they had me late in life. So they were in their 40s when they had me. I'm an only child.
Oh, wow.
So, which is kind of interesting,
wow, that's
right?
incredible.
So I had a lot of invisible friends when I was growing up, and so you know how that goes. And
These are my 5 friends named
talk to
Joe,
myself
right?
a lot, right? And but yeah, so they moved down here in 1968. I think paid $13,000 for the first house in Hazlitt.
Wow.
I grew up in Hazlitt. Awesome dynamite family. My parents were awesome, super supportive. Day one looked to go into business when I graduated from Raritan High School here in 1985 and went to Montclair State.
Nice.
Got a college education for $7,000 a year.
Yeah.
So worked out well. Came out.
And what did you study, by the way?
So I was a finance major.
You're a finance
with
major.
a political science minor.
Did you know, because listen, there's nothing I think more inspiring than when as you're growing up, you're impressed upon by your parents. The values of strong work ethic, but also a little bit of knowingness and transparency of what you're going to go into in higher education.
Yeah.
So when you because those are very, very poignant majors, right? Did you know that was something that you wanted to do when you went to college?
So yes and no, and the yes part of it is my father coming out of that family business was discouraged from being an entrepreneur because of the challenges he had with working with family. There was always such a family, rub that somebody was always mad at somebody else. So he had a philosophy of work for somebody else, put in your 30 years, and retire. And I didn't know where I was going. I knew I wanted to be in business, and I was going to get that degree, and I was going to go work for, a major organization, major company.
Sure.
And I saw my friends doing internships at that time with like Price Waterhouse and the big 8 accounting firms at the time.
Back then it was Arthur Anderson.
And you know who I'm talking about, right? And I came out of school. My father had passed away my junior year. Yep. So being an only child, I actually left school to take care of mom.
Sorry to hear that.
No, it's all good, man. So I can't believe it. That was 1988. So
God rest his soul.
Coming back home, and then realizing, wait a second, I'm seeing my friends go into these entry-level positions, and they're doing okay. Yep. And then realizing that their moving up the ladder was predicated upon them getting reviewed by somebody that was concerned about that person taking their job. And it was just this corporate struggle, and it just didn't resonate with me.
Isn't that incredible?
Yeah.
I know. I wish I would have recognized that years ago.
Yeah,
But
here I am, a 22-year-old kid, 21, and I said, well, I don't know what I want to do right now. Let me start a landscaping business.
Oh, really?
So I started a landscaping business, mowing 110 lawns out in Manalapan.
Wait. Post-graduation?
I never graduated. I didn't finish because of my father dying in the middle of this.
Got it.
But then I realized I started reading a little bit, and I said a lot of self-made millionaires don't have a college degree.
No, it's very true.
Right?
It's very true.
So I said, okay, let me endeavor to get education, but I was always more of a hands-on guy. Okay. So let me get life experience, So I started this small landscaping company. We did well, and again, as a 20-year-old, I tended bar. I did all that. Sure. Made some extra income. Yeah. And then,
but were you reinvesting back into the business?
We didn't really need to because there was like no overhead. We had a crew of what we needed. Yeah. I didn't see myself there long term, which was really the reason why.
Got it.
So it was like a couple of years. Let me plan out what I'm doing next, and let me move on. Because let's be honest with you, I used to say to my partners all the time in the business, the only thing that you can get excited about in mowing lawns for a living is straight lines, and that's not what I wanted to do. I didn't see myself doing that. Yeah. So
I've never heard that before.
That's about you.
Folks, we are Infinity X stage and microphone with Human Excellence. We're joined by Frank Monetti this evening, and we're going to get a deep dive education on all things interest rate, mortgages, real estate, etc. But we're hearing about the journey of Human Excellence and the foundation of somebody who was going to Montclair State in finance, and through life's changes decided to pivot and move into business, and that's where the discovery of the entrepreneurial spirit really came from. So Frank, what happened next?
So what happened next was, my partner, I had two partners in this landscaping company, and one of them I've known, I met him in college, and he came to me and he said, I want to talk to you a little bit. You ever thought about being a real estate appraiser? And I had a cousin who had an incredibly successful real estate business in Hudson County. Okay. And it always piqued my interest. He talked about it a lot. I was interested in real estate.
Random question. Yeah. Where did that come from? Was it because he was following you? Like, were you
hearing stories? Definitely hearing stories growing up. We didn't really have sit-downs about it. Yeah. But I saw his success. I saw what success brought him. And it just piqued my interest. Yeah. So the door opened to become a real estate property appraiser. Okay. So I went to Middlesex County. There was a couple classes we took there, and Rutgers had a couple of real estate classes that are part of the real estate appraisal designation. Yep. So I got it certified to do appraisals, started working for a company in Old Bridge doing appraisals. About week 3 into it, I was like, this is awful.
Really?
This is awful.
It was just like the last, You
hop in the car and they're like, here's your assignments for today. You're going to be in Cape May. You're going to be in Jersey City. You're going to be out in Trent. And I'm like, this ain't happening.
This is not happening. No. I'm going to do a 300 miles in a day. Every day. No, thank you.
And then bear the expense. Nothing was digital camera-wise back then, so we had a printer on photos and all that stuff.
God. Oh, yeah.
But I stuck it out to the point where I had a great appraisal course professor that said, get your real estate license too. Yeah. Because back then, this is pre-multiple listing system, right? There was no multiple listing system as realtors know it today. It was on little index cards. So if you had to pull comps to do an appraisal, you had to walk into the local real estate office. So it was good to have that. So I got my real estate license. Soon after, realized I don't want to do appraisals anymore, and I went and sold real estate right in Hazlitt, working for a company. And I was okay. It was, again, didn't resonate with me. Yep. And at that time, I was turning my mortgage business, referring it out to the real estate company, had a mortgage company they also owned. Yep. And The sales manager there was somebody I was friends with from the day I started in real estate, and this went on for 2.5 years or so.
Yep.
And I said, you know what? I'm going to just see where this goes for a little bit. And I wasn't comfortable in it. So the person I was giving the mortgage referrals to said to me, I sit down with your clients. You're qualifying them. Back in the day, realtors actually qualified.
You kind of had to, right?
Right. It was not like it is today, right?
Yeah.
And I'm glad. And it shouldn't have been.
And by the way, that's the death of the service model.
Oh, for sure.
I would say 100%
for sure.
is that people are just outsourcing everything.
Everything,
to
right.
Totally agree.
And, granted, they should do what they do best. So he's like, you're giving me all these people. All I do is take a mortgage application, and it's already done. It's a done deal because you've done the qualifying. Mm-hmm. Why don't you come next door and work for me? Come in the mortgage side. I think you're doing yourself a disservice. And that resonated with me.
Got it.
I like the numbers. This is the finance side of what I want to be in. Yep. So that was March of 1997. Okay. I'm sorry, March of 1993.
Okay.
Within a year or so, he was the sales manager of the overall team. We had a great team of loan officers working there. And within a year or so, we split that team in half, and I was one of the sales managers, and he was the other sales manager. And the corporate structure became, he was the vice president, I became the assistant vice president of the company.
And as a sales manager and then ultimately the assistant vice president of the company, you're still underwriting mortgages,
well,
correct?
We're originating.
You're
we're just doing all the originations.
Okay.
And I was doing company-wide training for all the new loan officers.
Got it.
So we had two teams, and we're producing managers, too. So
Yeah,
we're writing our own business,
yeah,
right?
Of course. Which, by the way, is the best type of manager. Right?
Oh, yeah.
All
I'm in the
sales,
trenches. Yeah,
exactly.
Yeah.
All you sales managers out there, right, especially in the insurance business, keep your pulse on what we do.
Yeah.
Do not forget that, right? Many people forgot that a long time ago. The proof is in the pudding of what the production looks like. Anyway.
For sure.
Yeah.
So that goes on for a little while. Something happened in a corporate shakeup structure of the company that I went to work for getting bought out, potentially, where a couple of people got some golden parachutes in this, and they got cut off at me.
Wow.
And the person who brought me into the business, who's the vice president now, who was a close friend, said, I just want to let you know, and came clean with me that you're cut out of this deal. And I said, okay, I guess I'll have to figure out what to do next. And in that short period of time where this was transitioning, and that never happened, by the way, we decided through some other events that happened, we're going to go out and open our own brokerage firm.
Smart.
And we were approached by a third partner who had licensing in place already.
Yep.
He had that mortgage banker's license. And we had known him for years. He had been a wholesale mortgage lender, meaning he was calling on us. We were giving him business as the bank, right? So we came together, and in 1997 we opened up. We stayed there, did great through all those 03, 04, 05 years, 06. Now here comes what we all dealt with in 06 and 07 and 08. The market tanked.
Even before we get to that, though, let's talk about, when you started up your practice, right? How much startup capital do you recall? Did you have?
I know exactly. I can tell you
exactly.
exactly
I love
what
it.
was.
Yeah, let's hear it. Come on.
And a lot of people aren't going to believe this, but so this is 1997. It was actually July we opened.
Right.
July in 1997. It was a $10,000 investment from each of us. It was $30,000 startup capital.
What?
Yeah, that was it. And back then, to get licenses,
is that right?
Yeah, and it's not too much different today from a licensing perspective.
Yeah.
To be a mortgage broker in 1997, you had to have a $50,000 net worth. And the net worth could be equity in your property.
Oh, sure, of
and
course.
they didn't ask for
They
proof.
didn't ask for
yeah,
proof.
they didn't ask for
you
proof.
Just do anybody.
So here's what we have. So it's $30,000 worth of startup cost. We rented our first office space on Route 79 in Morganville, and I think it was $800 a month. And we got used furniture from a local furniture people, and we went to work.
Sure. Yeah.
And, we didn't recruit any of the people from where we came from. That was not what we were going to do. But yet, a number of people said, we won't stay here if you guys aren't here. They came on board. We hit the ground running. Yeah. And look, I was scared. I was walking away from a good income.
I get
to
that.
say,
I get that.
I don't know what this is going to look like.
Yeah.
you know?
Folks, real quick, we are InfinityX.com. We are InfinityX YouTube for the replay. If you do have a question for Frank about any and all things interest rate, mortgage, or real estate related, put it into the chat. Parker will bring it over to my attention. But guys, you are hearing the foundational pieces of the megapreneur, right? Somebody who is walking away from a hell of an income, right? A predictable income to launch his own business, $30,000, right? Back then, again, not huge, but it didn't grow on trees, right? But going into the great, the emergence of one of the greatest real estate runs in the history of man, followed by one of the biggest collapses in the history of man. And you had, you had front row tickets, my brother.
I lived it. And if you want to talk about it, we're going to talk about the ugliness.
Let's get deep. Let's get deep. So
we opened. We hit the ground running in 1997, and it's a great run. You know, blessed with being able to buy investment properties. Was blessed and lucky enough to get in on the Asbury market as from an investment perspective in 2000 and 2001 and 1999, right? And for those of you who've been around real estate in the area, you remember what happened with the House of Cards incident with the Asbury Park Press broke what was going on in the Asbury Park real estate market, and it tanked. And we saw the potential in Asbury. Look, you couldn't drive down Asbury Park in that collapse and look at these beautiful tree-lined wide streets and say, and Cookman, even though what it was back in the late 90s, and say this town isn't going to come back.
Oh, absolutely.
Just like
100%.
Red Bank here.
Yeah, absolutely.
Same thing, right?
Yep,
so
absolutely.
we got into that market and bought like at rock bottom prices and sold ridiculously high. And that all went on, and the mortgage business kept rolling. We kept thriving, 20 loan officers, mega production every month. The one good story I want to tell you about when I left the company I was working for that I started with, they actually had a number of real estate offices that we were getting a lot of referral business from. And I also, the reason what scared me was that particular individual I was working for told his realtor base, do not send them any referrals.
Wow.
So I lost 25 realtor partnerships on top of going to open my own business,
Unbelievable.
right? So all that
Wait. So they cut you out of the deal. And also, well, theoretically, right? And then also said, oh, by the way, don't send them any.
Yeah, Frank and his partner went to open their own thing and don't send them any business because I'm not happy with what they did. Okay, whatever. Okay. So we move on, reinvent kind of how we do things, and then we roll from 97 through 2005. And I want to say 2005 into 6. I believe we as an industry felt what was coming in 07 and 08 before everybody else did. So
what were some of the indicators?
Some of the indicators were, well, if you remember in the newspaper at the time, and I don't even think the Asbury Park Press, for example, was the paper around here, wasn't digital, but they had the implodometer. It might have been digital, where you were seeing mortgage investors go out of business. Quite honestly, we saw it in the change of guidelines. And this is me talking. People might disagree with me that are in the industry.
Around subprime.
Yes. That's part one.
Yeah.
But part two is even what Fannie and Freddie were doing. Fannie Mae and Freddie Mac, you have a pulse, you're getting a loan. I need a pay stub from you. I don't need W-2s. I just need a pay stub and a bank statement. They were so loose on their guidelines that everybody was getting loans. And then you layer the subprime. Now, subprime lending. No income, no SF verification, 500 credit scores on a 228 arm. So a 2-year arm with ridiculous margins that at the end of 2 years, these people are nailed.
Oh, my God.
With no income verification.
Of course.
So every person that was self-employed said, well, things will get better. I'll take this mortgage now.
Let me just run with it. Of course.
Yeah, and we all, if you ever watched The Big Short, you know what happened and transpired. But yet we were given products to lend, right? Fannie and Freddie told us what the guidelines are. We followed the guidelines.
Why would they be willing to take on that block knowing that this is what the outcome was going to look like?
Not everybody knew the sky was going to fall.
How is that possible?
Well, you look back now and it's, we have property appreciation. Things are going soaring. That was a bubble, unlike what today is happening. We don't have a real estate bubble.
We're going to go so deep into that, folks. You heard it here. Bubble. Chris Walsh said it here on the Infinity X stage a few weeks back. Frank is saying the exact same thing. We are not experiencing a bubble. No. I share that enthusiasm. We're going to go deep on that. But, Frank, please.
So we go on, and the subprime mortgage market's around. And honestly, even on the brokerage level, when we had our brokerage, it's about 25% of our business. So we were doing a lot of those because they were here to do, And like to believe we were helping people with home ownership, and then now we start to see businesses go out of, but lenders go out of business.
Yeah.
Subprime starting to go away.
Yeah.
If I tell realtors that started recently in on the real estate side of things, we had price reductions, not price increases, right?
Yep.
We saw a property, house listed for $300,000. Next week was $275,000, and they couldn't. There's no market, right? There's no market,
And rates were around where they're at right now. Right?
They might. We were just talking about that. I think they're probably
very
similar. Without looking back to a graph, maybe even a little bit lower
than we are right now.
Right.
Yeah.
But now we're starting to see the same triggers in the market, and when I'm talking economic triggers that we're kind of seeing now. Unemployment started to become real. Inflation started to kick up, and that led to, and then we have these way over inflated property values, and now we've got a slowing economy, people losing their jobs. It's foreclosures and short sales, and nobody to buy them. And then the whole banking industry goes boom and bust.
Yeah.
So now
long-term capital and
right. And 07 to 08, now comes along the bailout of the banks.
Yep.
And in that bailout, and I try not to hold some resentment for what happened.
Hey, listen.
But the reality is, when at that point in time, mortgage brokers accounted for 75% of the mortgage originations in the country, and the banks accounted for 25%, and they wanted it all. So they get bailed out, and the government points the finger at the broker, saying we're the reason why this happened.
Yeah.
When in reality, we sold the products
that the banks were originating.
And Fannie and Freddie, quasi-government agencies setting guidelines, gave us to sell. Now, we wake up in 08.
The Pirates of Manhattan, man.
Right. Everybody
Barry
got a
Dyke.
golden parachute, right?
Read the book by Barry Dyke, Pirates of Manhattan.
Yeah, so now I wake up in 08. Now what are we going to do? Now, literally, I had two partners in the brokerage, and I was the number one producing loan officer as well as an equal partner in the business.
Yep.
And I found myself still bringing in cash flow and having to take every nickel I make and pouring it back in the business. Now you're talking about pouring money back in the business.
Sure.
Because we don't want to let anybody go. I've got staff. And I had went through a bad divorce at the same time. Timing of that was awful.
It usually is.
03, 04, 05 were the years that they determined alimony and child support for me. And I find myself like, I'm not taking any income.
What am I going to do here?
Right. Yeah. So I wake up and I'm like, there's got to be something beyond this. Where is this mortgage origination industry going? And I decided to cross over to mortgage banking, get out of the brokerage world because it was falling apart. Yeah. And brokers have crept back in now, and that's absolutely fine. But it's really about, being a mortgage lender, or a bank. So I crossed over to a friend of mine that I actually brought into the business. He worked with me in the broker world, came on board with me and said, with the knowledge that he was going to open up an operation for his uncle who was a California-based lender.
Okay.
And I was like, cool, come work for me. And we became friends, and I left that brokerage operation with $38 in my pocket in 2008.
Wow. You remember the exact dollar
I remember the exact amount because my wife now, I was like, I just left. I just walked out on $38 in my bank account because I knew it wouldn't last. And my partners were like, well, no, maybe we can do this now for you. And I'm like, it's too late. Ship sailed. Yeah. I got to move on. Yeah. And I moved on. And what I did was I had to reinvent myself. I completely reinvented myself. I went home.
This is so good.
Sat at home for 5 years.
Yep.
And said, I don't want to manage people. I was so disgruntled, I was so upset. I needed to work on me. I had realized now I consider myself a servant salesperson. I'm in it to make people's lives better.
Yes.
There's a financial reward that it's a spiritual principle. You
can't
shut it off,
absolutely,
right?
100%.
I didn't have that attitude.
Nor should we frown upon that or feel ashamed of it. Yeah. Right? It's one of the most noble professions that you can do. You should get paid for introducing good
everybody
service to
should
people.
Get
absolutely.
right. Absolutely.
100%.
And I needed to work on me. Yep. I needed to change. And I swore in 2008 when I walked out, I'd never open another company. Yeah. I'm just going to do my own thing, produce on my own, and have no headaches. And I sat home for 5 years, and my wife was selling real estate at the time. And over those 5 years of just changing me, Frank needed to change Frank.
Yeah.
And working on the inside to just really come to terms also with what went down, right?
Yeah.
Because I was bitter and I was angry.
Yeah.
And
yeah.
so.
If I may.
Sure.
When you were doing the times of self-reflection,
yeah,
who were some people that you modeled after?
So I'll be honest with you, and your partner Rob knows this well.
Yeah.
I pastor a church in Toms River. So
you pastor a church
I'm an
in Toms
associate
River?
pastor of a church in Toms River.
That's
so
incredible.
My faith was always real to me.
Sure.
But my faith, I left it a long time ago.
Oh boy.
But God was still in the picture, right?
Yeah.
And I just poured myself back into that, what my foundation was. And I watched some of some of my minister friends and how they led their lives by example, and really imploring the golden rule.
Sure.
And that's really what I went to. And look, every person you can learn from is awesome, right? Any knowledge you can get is awesome. But that's really I actually modeled my business after those principles. And did that internal change and realized I'm not in it for the money. I'm in it for the people. And I need to change what I'm doing because it's about helping someone else.
You can tell yourself the story that it's about the money, but if that's not in your DNA, it's not in your DNA.
But the offshoot of helping people
is getting paid. Right, sure.
And it growing exponentially because clients know that. They know, they feel it. They know it in the way you talk. They know in the way you pick up their phone calls. They know it in the way you treat them, right?
Yep.
So 5 years goes by, and now I'm starting to get on the inside. It's time to do something, And this was the beginning of late 2013, and my now partner had called me up and said, "Look, he knows his gig is not running an office. It's not what he does best. Not his highest and best use." So he called me up and he said, "I need you. Can you come in? Would you consider running the office?" And I was like, I'm getting that itch again to go back into managing an office, running people, doing my production. And that was 2014, so going on 8 years ago. And that reinvention just kept rolling and rolling. And,
What was different when you got back? But tell me more.
Sure.
Right? So
Sure.
You were a different human going back into
Yeah.
it. But when you got back into that environment, knowing now that you had put in the work, what was different day in day out?
Made me a better manager. It made me a better manager from a perspective of I always saw people that worked for me through my eyes, how I expected them to be.
Yes.
Not the way, not take them as they were.
You didn't meet them where they were.
Try to make them better.
Absolutely.
So
I totally get that.
I got much more patient with people. Of course, we all lose our cool a little bit sometimes when something happens repeatedly. But I really got more of a respect for people, realize they're individuals. What works for me, even though I know it works for me,
doesn't work
might
for everybody.
Not necessarily work for them.
Yep.
Take them with their strengths and help them with their weaknesses.
Shout out to Joe Lord, my partner, because for some reason I haven't been able to really necessarily get it through my brain yet that he can't read what's actually going on inside of my head. Joe, I'm still working on that with you, but shout out to Joe. He works his butt off every day for me. But yeah, you can't put people in between these two ears. You just can't do it. And you can't expect them to do it either. I totally get that.
And I used to look at people like, well, I don't understand why they don't do it this way.
Right.
Well, they don't do it this way because that way doesn't work for them. Yeah. Or it's just not who they are. So that helped me, I think, from a better management perspective, being more patient. And really, I took the time to know more of the backside of management in the mortgage industry, where before I was more on the origination side. When I had the brokerage, I was the sales manager, meaning true sales manager. I was out there helping them structure loans and how can we make this work? Where now, over those 5 years, I got more of a better understanding of back office side. What our processing staff does. I like to say,
which I would argue probably made you so much better of a manager.
Oh, 1,000%.
Because you can't be like, that's one of the challenges with salespeople is that salespeople so many times don't understand what's happening operationally. Right? They don't understand communication between branch office and home office. They don't understand all of those things. They just expect it to get accomplished. Now, listen, I'm a sales guy, so I'm one of those people that is a big pain in the butt when it comes to that. But what I have recognized, and I cannot shout out the operational piece of any sales business enough. It is so unbelievably important as a partner to sales, right?
And what I looked at was I have to be able to perform, maybe not at the level of a support staff person that's for me, but I have to have a basic understanding of what they all do and also the alliances and strategic alliances I have in place. I got to understand a little bit about the title side of things that the title companies I work with do. I got to know what my appraiser does, and thank God I had a background in that. You know, I got to know a little bit about real estate law. I don't give people real estate advice, but I got to know when I get an attorney review letter on a new purchase for a client, a little bit about what that attorney's talking about, you know? I got to know about, so I really endeavored to go deeper into the whole, really the overview of the mortgage industry, not just the origination side. You know, I had the origination side down, but I needed to know a little bit all of it, which now helps me understand what all my support staff go through and really has made me a better manager.
Folks, we are Infinity X with a stage and microphone with human excellence. This is Frank Monetti. And guys, we have just heard the evolution of and the evolution of the entrepreneur, right? The evolution of, and not, you know, listen, an employee and entrepreneur at the exact same time. I would argue that you can be both, right? I think that in order to bring really, really high quality managerial technique to any branch office, you have to be an entrepreneur, right? You have to have a semblance of, you know, outside of the box thinking, in addition to thought inside of the corporate box. I mean, right, obviously you're going to have to play with that a little bit. It's
that
yours.
branch is yours.
Correct.
You know, yes, there's a corporate office involved, but that branch is yours. You know?
Replay on weareinfinityx.com, We Are Infinity X YouTube. And if you have a question for Frank, now is going to be the time to put it into the chat. Parker will bring it up and let us know what is on your mind out there. So, Frank, we are now in a very, very, very interesting time, brother.
Yep, for sure. And a time I thought we would never see, you know?
Yeah.
I actually said this to a real estate agent the other day. I miss counteroffers.
Yeah, they don't have, yeah.
Right?
They're non-existent.
They're non-existent, right?
It's just bid war.
Yeah, you know, hey, house gets listed on Friday. Give me your highest and best by Monday, and 100%. We'll hope you get the house, right?
Yeah.
So yeah, I mean, it's still challenging. And the biggest question I'm getting right now from all my clients, and the biggest concern I'm getting from them all, is interest rates, right? What in the world is going on with interest rates?
What, Frank?
And I'm gonna.
What in the world is going on with interest rates? So everybody wants to know this.
Here's the long and the short of it. It's all inflation driven, right? Inflation, as inflation creeps in, interest rates rise. Now, for those that follow the markets, they're well aware. For the average person who doesn't have their eye on the markets and just see interest rates going up, here's what's been going on. You know, so when we flash back to like January of this year to today, rates are about 3% higher.
Incredibly.
That's a lot.
I know.
That's the fastest uptick I've seen. I can remember.
I think in 45
years. 40-something years. It's over 40 for sure.
It's insane.
So
it's insane.
Here's the numbers we're hearing. Inflation's at 8.6%.
Bullcrap.
It's not 8.6%.
Yeah, right.
You know, the government can say, the Federal Reserve can say it's 8.6.
Folks, listen to what he is sharing right now. You must understand what he is sharing.
Because what they'll say is this. They talk about the core rate of inflation, which strips out food and energy. But in this market, how can you strip out fuel when it's doubled?
Thank you.
It
is impossible.
You can't.
And it's what drives the food to our
us,
grocery stores. Right?
Everything gets shipped, 100%. Train, truck, boat. So it can't be 8.6%.
How are you going to strip?
Right?
I know. It's such false advertising.
Whatever.
It's such a load of crap.
So we're dealing with 8.6% inflation, right? And now we got the Federal Reserve that is way behind the ball of what they should have done.
Everybody says that,
So they take this month they hiked the federal funds rate of 0.75% on the heels of a 50 basis point and a 25 basis point. their ideal situation. And the reality is this is something they should have been doing prior to when they started doing it. Yeah. But a couple things we need to remember. The Federal Reserve is a politically based organization.
Exactly.
So there's two things they don't want to do, although they were forced to. They had to raise the Fed funds rate.
Right.
Now, remember, this is a midterm election year.
Yep.
And we know what party's sitting in office. Mm-hmm. They don't want to hike rates, but they have to.
Right.
They don't want to talk about that ugly curse word that starts with an R, recession.
Right.
But the reality is
they have to.
They're going to have to start, and they're still denying a 50-50 chance of a recession. Well, to be a recession, you need 3/4 of negative GDP. Mm-hmm. The problem with that is they won't look to the number as it comes out. They'll look at the revised number after it comes out. So there's lag time that takes.
Absolutely.
But when you look at indicators of recession, we're already starting to see unemployment creep up a little bit.
Yep, we sure are.
The other side of the coin, too, is when you look at Treasury bills, you look at the 10-year Treasury and you look at the 2-year Treasury. Mm-hmm. The yields on both of those are close to each other, and 2 times in the last few months have
inverted.
Flipped,
yeah,
inverted.
Absolutely.
That's the problem.
I know.
That's the recession triggers.
Yep.
But they don't want to say recession.
And anybody who says that it is not a political, I'm so glad that you said that, because anybody who says that it is not a politically motivated market or a politically motivated Federal Reserve is kidding themselves.
It's just the way it is.
They did not want to see, they did not, in my opinion, did not want to raise rates because they didn't want to trigger a market sell-off.
And they don't want to say that word, we need to get inflation under control.
100%.
Right?
100%.
So,
God, that's so right.
They didn't look forward far enough, right? They didn't have the foresight to see bad policy, right?
Bad policy.
So now we've got, we'll use their number, an 8.6% inflation rate. They hike 0.75 in the last meeting. They're planning on at least 1.75 over the next 4 with a goal to get to a neutral rate. Fed funds rate equal to inflation.
God.
If it's above it or below it, that's fine. But the reality is we're far off.
Yeah.
You know, if our Fed funds rate today was 1.58%. We're at 8.6 in inflation.
How's that?
We're far off.
How the hell are we going to get there?
Well, the hope, and here's the hope, and we don't know what the hope is, but their hope is that as rates rise, Fed funds rate, as they continue, inflation will quell. Because now you increase prices on products, demand goes down, which means prices drop. Will that happen?
Not unless they get energy under control.
That's the problem.
That's the biggest problem.
It's gonna drive everything we eat, wear,
no matter what. And until they, and we have a green legislation. We have the green legislation in office currently. Whether you're on that side or you're not on that side, that is what it is.
Well, we went from energy independent to energy dependent.
Totally energy dependent.
And
I know.
You can't debate that.
I know. And everything is driven off of oil as well.
Yep.
It's so true.
Yep.
Oh, boy. God, folks, we are Infinity X. This is Frank Monetti, and we are we are going deep down the rabbit hole of what's happening with interest rates right now. And so, with interest rate maneuvers, right, with that ugly R word of recession, Frank, I think not everybody, a lot of people are referring to this time and comparing it to 2008. That is a bad analogy.
For sure.
Tell everybody why.
Sure, and there's a lot of reasons why. Yes, we're dealing with inflation, but we've also been dealing with dramatically increased salaries too. So there's people making a lot more money than they were making in 07 and 08. So there's people that can survive, this type of inflation.
Yep.
Nobody wants to. Right. Nobody wants to pay $5 for gas, but they can. They can manage to and afford to do that.
Yep.
That's part one. Number two is we have a real estate market where prices are increasing and have been increasing. I think the statistic for Monmouth and Ocean and Middlesex counties last year was 22.6% in appreciation, right?
Yep.
But that was built based on a free market, meaning it was driven by supply and demand.
Sure.
Right? Yeah. So where before, in 08, it was driven by artificial appraisals and bad mortgage products, bad mortgage products
It's like
are
the
gone.
.com era, right? You know,
Right,
I mean, it was the exact same thing. You had .coms that had no intrinsic value whatsoever, no earnings, but people were so highly speculative back at that point that they were buying, sheer lack of fundamentals. And so it was the exact same thing.
Sheer lack of fundamentals. That's a great way to put it. And now what Fannie Mae and Freddie Mac did do, since 2008, they've been tracking every appraisal that's been logged in on every loan that they've guaranteed. So now they have this bulk of trends of appraised values, that they can monitor. So that's in place. Appraisers are under guidelines that keep them, really moving in the right direction. And guess what? Demand is still here.
And what is maintaining? Because I've heard numerous different opinions around this, but what is your opinion about what's really maintaining that level of increased or sustained demand?
So the increase of capital, as far as people making more money today, and is it really increased demand or is it lack of inventory? If there was more inventory, our demand and supply would be a little bit more imbalanced, right? So we're not. So we really don't know what that is. And I think even the bigger speculation is, why is our inventory so low? And I have my own theories.
Is that work from home, COVID? That's
work from home, COVID, and I think we made a lot of people comfortable in 2.5% mortgages that don't want to leave and pay 6%.
To that. Absolutely.
Although
you're 100% right about that.
One of the things I did want to mention with regard to interest rates. And we're slightly under 6% on 30-year money. And just so you guys know, I'm a 30-year money guy. Do not take a shorter term.
Say it loud. Say it proud. Let's go on to that
Don't
in a minute.
take a shorter term mortgage.
Thank you. Okay.
Take your tax benefits from your 30-year. If you wanted a 15, take the money that you would have paid towards your principal and interest and make that money make money.
Exactly.
It's that simple, right?
Yep.
So,
not to mention where tax is going to be 22 years from now, right?
Right.
You might need the deduction.
Right.
I mean, look at debt to GDP right now.
Good
folks.
chance, right? You're going to need the deduction.
Right.
So, but there's a cost to waiting, So even 3% to 6%, and let's use the issue. Let's say a $500,000 home with a $400,000 mortgage. And I'm going to get rough numbers here, but a $400,000 mortgage at 3% versus 6%, you're paying about $700 more a month for that mortgage payment, which is $8,400 a year. But if I told you, would you rather save $8,400 or even have $8,400 extra to spend, or would you rather have $30,000? Well, that's a no-brainer. I'd rather have $30,000.
Sure, of course.
Well, we're not going to see probably 22.6% appreciation the next 12 months. Indications or economic predictions are somewhere around 5.7%. I think it's still going to be double digits, but that's me, because in our area anyway, because that's where I kind of have my finger on the pulse a little bit. But let's say it's even 6%. That house that you bought for $500,000 could have bought today for $500,000 at 6%. Next year, if rates do come down and you wait for that, you've saved $8,400, but now you're going to pay $530,000 for that house, and you lost out on $30,000 worth of equity. That's real. So there's a cost to waiting.
Absolutely.
And people don't realize that.
And
now,
then
if you
what's
take
the
that
lost opportunity cost on that $30,000 that you could have had?
Exactly.
I totally agree.
And now if you take that out 2 years, now you take 6% on top of that $530,000. Now you're talking about paying, what does that work out to be, like $560 or $50 something thousand for that same house? And the reality is rates will go up, but it's a roller coaster. They're going to come back down at some point,
Sure they are.
giving you an opportunity to refinance with more equity to get a better rate environment. So yes, you may be pushed out of your qualifying a little bit because interest rates are higher. But that's where we come in, to creatively structure your mortgage needs from more of an organic approach. Look, is there some leaks that we can plug to get you more mortgage dollars and make your payment more affordable? Hey, I've got 25% to put down. Well, maybe you don't want to put 25% down. Maybe you want to put 20 or even less. And maybe we want to take and attack some of that revolving credit card debt that's just awful. You know what I mean? It's an overall structure. And I'll be honest with you, most home buyers do not understand, specifically not just first-time home buyers, almost a lot of them don't understand the tax benefits of ownership. And what that can save from cash flow.
Yep.
Which is real.
Yep.
Whether it's, changing your withholdings or whether it's year-end taxes in April.
Yep.
That's a real cash flow savings that makes them or gives them the ability to afford a little more house that they didn't even realize they could.
Folks, this is Infinity X, stage and microphone with human excellence. I'm joined this evening by Frank Monetti. And, am I saying that
Monetti.
right?
You got it.
Jeez,
Yeah.
I think I called you Moretti
That's
before.
all right.
Like an idiot. I'm sorry about that, Frank. But Frank Monetti, who is just absolutely laying it down, all things interest rates, things that talking about real estate markets, and everybody has been speculating that the real estate market is going to retract. Frank is counterpunching to that, and he's counterpunching pretty hard around that. I have the tendency to agree with him. I think that maybe it'll remain levelized.
Yeah, we're not going to
Frank.
see those crazy, 22.6%, but that's okay. We weren't supposed to anyway.
Yep.
When
somebody is approaching purchasing a home, a lot of the times in the financial planning space, Frank, what we'll see is we'll see people manage your life in silos.
Yeah.
You know what I mean?
Yep.
Like, okay, my accountant does my taxes.
Yep.
My attorney does my legal affairs.
Yep.
My financial advisor does a multitude of different things, whether whether they're giving investment advice or insurance advice or whatever it is. And when you're seeing home buyers, right, are they looping you into their financial planners?
Most of them do it all backwards.
Tell me more.
They approach their real estate purchase completely backwards. They reach out to their realtor first. And realtors are awesome. There's got to be a strategic alliance with a realtor that knows what they're doing in this marketplace that it can fight that bidding war and get their offer accepted. Right? That's super important. But I'm glad you mentioned that because I have actually a video coming out on my social media about what's the steps.
Oh, shout out to his social media, folks. Where can we find your social media now?
We're in the middle of revamping everything, but it's
Yep.
Frank.Monetti at Advisors Mortgage on Instagram.
Got it.
But we're keep an eye out for the launch. Just hit me up in the search, Frank Monetti, and you'll find me there. The new launch of the social media is coming out in the next couple weeks.
Love it.
Yeah, shout out to the
shout
guys
out to
here
Danny
because they're
Drew
doing
right
it.
there.
Yep, right.
Danny and Parker, what's up,
Danny
boys?
and Parker doing it.
Yep,
so,
doing their thing.
But one of the videos we talked about is what steps and what order should I take the steps in when I'm buying a home. Don't call me. Don't call the realtor. Reach out to your financial professional.
Yes.
You want to talk to them about what you should be doing, what cash you have to spend, how you're going to set up this purchase even later on.
Yeah.
Whether it and your attorney too. Is it going to be a life estate? Is it going to be something along those lines? Talk to them first.
100%.
Then come to me.
100%.
Come to me,
Yep.
and then we're going to plug that plan in with your mortgage plan. Make those work together. And as soon as I'm done with my thing, obviously have maybe a realtor partner that you want to work with.
Yep.
And obviously, if you guys don't have one, I'd be happy to get you to the network of people that I know are doing what they need to do in this market to make deals happen. But, then we fit the plans all together. But reach out to the financial person first.
Yeah.
You
it's-
got to know where you're going here.
And by the way, folks, don't derail your financial planner.
Yeah.
Right? Don't let them find out after the fact that you decided to list your house, sell your
Yep.
house, move to a different one, change your cash flow. That takes everything and completely
Yep.
throws it out of whack. I have a question for you, Frank, specific to the financial planning space, actually, for a moment. And it's shifting gears here. So one of our mainstay strategies for our clients is helping them to operate almost like they're banking on, building out their own bank.
Yeah.
If you
Yeah,
will,
for sure.
And using cash value life insurance, right,
Yep.
as a leverage
Yep.
tool. It's a turbocharger.
Yep.
From the mortgage side, I've always been curious about this. When you see a client that is looking to make a purchase of a piece of property,
Yep.
and they are they're heavily allocated with their cash in cash value life insurance, is it favorably or unfavorably?
Favorably.
Tell me why.
Well, it's cash.
Yeah.
It's no different. Well, it's a lot different than a bank account.
Sure.
But it's any cash that can be liquidated
Yep.
is good cash in the mortgage side, right? But now it's cash that's growing. So it's an investment vehicle. It's not just cash. What do you get? You're not keeping your money in the bank, right?
Right.
So you got to make your money work for you, right? And compound, right? But the reality is cash value life insurance, win-win. Absolute win-win for the real estate space.
Yep.
For sure. And it's 100% favorable. And I'll be honest with you guys. The majority of my clients that I run across, both seasoned, when I say seasoned, what I believe to be based on like their job history and what they do for a living, should be financially savvy, are not.
No.
They don't even.
I hate to say it, but you're right.
People in their 50s struggling. We don't have life insurance. We don't have a will.
They don't have a will. They don't have life insurance. And by the way, they're having these epiphanies now where I don't want to work for the company that I'm with for the rest of my life.
Right.
You know, and they're starting to feel out their entrepreneurial oats.
Right.
You know,
and we saw that through COVID. How many startup new businesses where people walked out of a corporate environment or a salary position working for somebody else to start their own business. And that's cool. You know, you start it later in life. That's awesome. It's never too late, right? But now it's, what do we got to do to make sure that we have sustainability into our retirement years? You know,
folks, we are Infinity X, stage and microphone. Frank Monetti. If you have a question for Frank, please put it into the chat. We will get to it. Replay, weareinfinityx.com. We are Infinity X YouTube. So, Frank, now that we're knee deep into the recession, essentially, I don't care what anybody says, right? But as we go forward, right, and as we navigate, what's next for you? Like, what does the next 5 years look like for Frank Monetti?
I'm still in this space. You know, I'm still plugging away. It's hard to walk over. I'll be honest with you. Talking a little bit about my history. It's at the early stages of my career, even maybe in through that 2008 collapse. I didn't love the business. It's just what I did. Now I actually have a love for the business, and the love came out of me changing me. You know, the love for the business came out of me changing me. So now I love what I do because I have a different approach.
Right. So you no longer work.
I'm helping people every day, right? Whether it's my own people inside my own office, help them build business and grow some new relationships. You know, we have 2 new loan officers with no experience that came on board. And that was one of the things years ago I swear I would never do again. But why not do it? Teach somebody what you did.
You can't keep
Give them an opportunity to have
you can't keep it unless you give it away, right?
You can't give it away. You never know. Like, I've always been a firm believer in training somebody to replace you.
Sure.
You know, and if you're the smartest person in your group, get a new group, right? You're in trouble.
That's
right.
So
that's right. I'm just excited for the shift in the way the business is going. I'm excited for the millennial market. You know, the millennial market is the biggest bulk of home buyers out there. You know, when we were filming my stuff, you know, with Parker and Dave, it was about the millennials are just awesome to work with. They like people like me in my 50s because they value knowledge. You know, they just approach knowledge in a different way.
They do.
You know,
right.
and
I agree with you.
You know, and things have changed as far as the way businesses originated. You know, I can count on one hand, I think, in the last 12 months where I met with a client face-to-face. Nobody wants to meet face-to-face. And back in 1993, that's all we did was sit in living rooms. I felt like Jerry Maguire. You know, I was a living room clothes guy. But so it's different. But I look forward to see the changes, you know.
How did COVID, in terms of, because that was such a great access point, you know, we as a company, I'm sure you're close with Rob, you know our story to a degree, but or not even to a degree, you know our story. We went, folks, Infinity X was born from how to 19X your sales, right? Well, we went way the hell beyond 19X, right? So, you know, our inflow of opportunity is absolutely drastic, right? We grew exponentially because we pivoted and weren't reliant upon the face-to-face client engagement, but more so than that, we weren't, you know, we weren't stuck with, old school, stale marketing strategy, right? We really kind of accelerated. You obviously did the exact same thing, and now you're even doing it further. So what about your marketing efforts changed so much during this period, during the pandemic, and what are you doing now?
So what I realized really was using the millennial market as kind of, you know, the benchmark, right? If you don't have a presence, if you don't have a social media presence, and you can't be found that way, they don't want to talk to you. You know, they go there first. They do their homework. They do their research. And look, I've always dabbled in it. And then I woke up not, I'm going to say one day, and the one day was a little while ago. I'm a little behind the curve of where I want it to be, and said, you got to bring professional people into this space to drive what you do. And I always like to look as professional as possible, right? I want what I'm doing as far as content, not only look professional, but I want to provide content that's going to help people. I was talking with Rob a couple minutes before we got started. I don't want to be that guy talking about how great I am in the mortgage space. I want to provide people with nuggets of truth that they can take and apply to whatever their needs are, not only just in the mortgage space.
Because it always finds its way back
always,
to you, every time.
Always, right?
With
always.
other business opportunities,
all the time.
maybe even outside of mortgage.
Open the door, And I've always enjoyed, too, the other thing I've done over the years is I've always enjoyed, flipping properties. That's something I like to do. My wife likes it as well. Kind of got out of the space because of how competitive it got. Like, I was flipping properties when there wasn't a home show on HGTV, so nobody knew what was going on, right? Now everybody was like, oh, I watch HGTV, I can flip a property, and the margins got thin. And so we kind of backed out of it and did a couple here and there. But really,
my wife loves
so does mine.
HGTV.
And I noticed that when I get home because something's changed, right?
Right.
So, I see it kind of evolving back into that. But I'm in the mortgage space, and I'm going to stay in the mortgage space, and because I love it now. It wasn't a job. Now it's what I enjoy doing.
You ever think about writing a book?
My wife has.
Oh, really?
Okay. She has. I've considered it. I've considered it.
Wait, your wife is published?
She is published.
Tell
Self-published.
Me more. Okay,
it's her life. It's her life story of where she came from. Actually, Rob knows this a little bit. We had a chat about it one day. It's really, she was sexually abused as a 10-year-old. So, and nothing, I'm not telling any stories outside of school, and it was by a family friend. And she, it's out there for everybody to read about, and the dark journey that took her down to where she is today. And now she runs a pretty big women's ministry. We have a ministry together on top of what we do at the church.
Man.
She runs a women's group, and she's published, and her whole ministry is about helping women that have been through mental, physical, sexual abuse get past it and move on to awesome, productive lives. So you said, what's next? Well, one of the things we'd like to do is open up a facility for women and maybe eventually men as well that teach these women that were abused, that think they have no place in society, have no real work skills and job skills, to get them trained, get them independent, get them, as highly functioning as possible, and get beyond. Don't let that incident define them. So that's one of the things on our vision list of what we want to do going forward down the road.
Not only does that have a book, well, I mean, obviously she already is published, but not only does that have a more story to come, that's got a podcast, that's got a TV show.
For
that's
sure.
Got I mean, that is just, I am behind that.
For sure. That's awesome.
Anyway, Frank, it has been
pleasure,
such an
man.
unbelievable pleasure to spend time with you today on the Infinity X stage, brother. I want you to put out to the group and to all the good folks who have shared our time and your knowledge, how they can get in touch with you folks. I just want, and let me just say this: if you're dealing in a in a direct to consumer with a direct to consumer business, right? Whether it's financial advisory, whether it's mortgage, ask yourself the question: do you want to be having the conversation and have somebody helping to underwrite your mortgage and or originate your mortgage and or put you in a home with somebody who is financially motivated ahead of you, or is vested in seeing people and caring and kindness lead people into the right financial fit for the right home? Right? Because that's what I heard Frank share tonight, right? Somebody who's invested in people, somebody who reinvented himself, a man of God, right? Somebody who is looking to create empowerment for people that have experienced traumatic things like sexual abuse, right? So ask yourself the question: who do you see in your future, and who do you want to work with? And with that, Frank, how do they find you?
Sure. And I want to tell everybody, just look for the relaunch of the social media. We're redoing everything. So we've been quiet for a couple of months because we're changing that around. But you can reach me via email. My email address is my first initial F, last name Monetti at advisorsmortgage.com. You can always call me. Call me, shoot me a text on my cell, 908-513-1010. 1202. And yeah, keep an eye out for the social media. And I know we're going to have content on there, just like what we talked about tonight. Yep. And yeah, I look forward to bringing like nuggets of truth to everybody.
My man. Replay, folks, on weareinfinityx.com. We are InfinityX YouTube. And we went and did it again. We brought value. We talked about what's happening in the interest rate markets. We talked about what's happening in the real estate markets. You guys got the opportunity to watch perseverance at its finest, and the combination of corporate thought process with entrepreneurial thought process cultivated into human excellence. Shout out to Frank Monetti. Replay at weareinfinityx.com. Folks, until next Tuesday, we will see you on another episode of We Are Infinity X.